You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? Mike from The Moose on the Loose. I hope you're doing well on this Wednesday. Today, we're going to take a look at all the Brookfields. I like to do that kind of review every quarter after all Brookfield companies reported their earnings. So they started late April and then ended up last week. So now we have everything that we need to know about Brookfield Corporation, Asset Management, Infrastructure, and Renewable. Interestingly enough, those companies will show a different story on the stock price graph than they are when you look at their earnings. Let me explain. So if you look at year-to-date revenue between January 1st and May 11th, Brookfield Infrastructure, including the dividend, is up 2.64%. Brookfield Renewable. Brookfield Infrastructure down by 5.2%. Brookfield Asset Management, BAM, up 1.5%, and then Brookfield Corporation down by 4%. So plus 264, minus 5, plus 1.5, minus 3. So not that great compared to the TSX 60 that was up during that time by 3.67. So definitely lagging the market for all of those. So what really happened inside each of those companies? And this is what's interesting. So all businesses right now lag the market, but their business is doing well. So if you look at Brookfield Renewable, for example, the distributable earnings per share was up by 6.5%. Revenue was up by 6%. So the company is actually doing pretty well. The results were mostly driven by recent acquisition, as it's usually the case, and better utilization of all the assets in place. So especially for the wind and solar segment, that did better than expected. Hydroelectric segment was pretty much in line with their average. But just to keep in mind that the company keeps on racking up that mid-single, almost high single-digit growth quarter after quarter, but getting the love. So that's interesting, right? I have to highlight the fact that all the Brookfield share the same problem about the reporting, the complex financial structure, and you have to deal with the fact that you have to trust management to calculate either the FFO per share or the distributable earnings per share. But anyways, all of those are kind of like handmade calculation by management. So I'm not saying that they are tweaking the numbers. I'm just highlighting that risk because it's a huge one. And if you don't want to get caught up in this kind of like, yeah, I don't trust management, or what if management is not doing the right thing? Well, then you should pass like this entire podcast about the Brookfield, because this is not the type of business for you. Moving on to Brookfield Infrastructure. Again, revenue up, earnings, FFO per share up 5%, which was pretty good. Again, Brookfield Infrastructure divided into midstream, transport, utilities, and data. What's interesting here is most of those have like long-term contract. Most of those businesses have long-term contracts. So most of the FFO per unit increase is driven by inflation, indexation, and of course, acquisition. So for example, with data center, that segment was up by 50%, driven by organic growth and acquisition. We have like strong midstream assets performance as well, up 8%. What kind of like slowed down the quarter a little bit was the transport segment, of course, with railroads and ports business, thanks to tariffs, going like shaky business at this point, slightly down. That was not terrible, but of course there's a lot of like question marks about what's going to happen, and the news around tariffs are changing pretty much every single day, so I'm not going to comment on that at this point, but it's going to keep on generating volatility and uncertainty. And of course, every business in the railroad or in the ports business are going to be affected. This is what's happening with Brookfield Infrastructure. Moving on now to BAM, Brookfield Asset Management. Keep in mind that's like the little baby of Brookfield Corporation, because Brookfield Corporation, BN, owns 75% of BAM. So if you own BAM and BN, you're kind of like holding BAM already if you have BN. The only difference is, of course, the yield is a lot more generous with BAM than it is with BN. So if you are looking to get income and not looking to see that money being reinvested, well, investing in BAM will give you a nice yield of around 3.1%, while unfortunately, Brookfield Corporation yield is below 1%, around like 0.60 right now. So what happened with BAM? Well, BAM is raising a lot of capital, and that is like great because they raised 25 billion in the quarter, up to like 140 billion in the past 12 months. So that drove, of course, fees on assets, because that's how they're making money. So their fees on assets have been driven very highly up. Distributable earnings per share up 18%. Definitely risen by all the fees that they're charging on their existing funds plus their active fundraising. So there is a huge appetite for this kind of investment, investing in real assets, in patient capital, in infrastructure and stuff that you cannot get the money right away, but it's not really linked to the market. So that's great. Like huge office towers, like bridges, data centers, railroads, and so on. So when you invest in Brookfield Assets Management, you invest in a business that manages those kind of funds. So they don't invest their own capital. They're just charging a fee to whoever wants to buy their funds. So it's a great way to work, and it's actually doing pretty well for them. So again, this one was up like 1.5%, including the dividend. So actually, the stock price was not up at all this year so far. So the dividend kind of like saved the day, but it's not doing that bad. Next one on the list, the last but definitely not the least, Brookfield Corporation. So this is the parent company. So this is the big guy. And the big guy reported earnings per share up 27%. It's actually distributable earnings per share. Again, big risk around trusting management on all of those calculations. And this is why it's always hard to figure out what's happening. It's like they own so many different businesses. They make so many different asset investments. And they're the one telling you how much it's worth at one point. And a big thing about Brookfield Corporation and all the other Brookfields is they're doing a lot of asset recycling. The asset recycling is buying an asset, make it better, and selling it at a profit. So that's great when you can do that, but you also have to follow up with management to see like what was the value at the beginning, what's the value on the book at this point, and when it's going to be sold. So again, just want to highlight this because it's super important. But in the meantime, this one is doing incredibly well. Again, making a lot of money on those fees that they are charging. So the difference between Brookfield Corporation and Brookfield Asset Management, between BAM and BN, is BN is asset heavy. So it invests its capital on top of charging fees. So they have like ways to make money when they are selling assets at a profit. So they're benefiting from that on top of their clients that are also, of course, benefiting as well. So the same playbook here, most of the results were fueled by raising capitals, selling some great assets, which boosted the business once again. And the company continues to grow its business this way. Good news for shareholders. While the shares were down, over the year, this year, just to show you how volatile it is, the stock price dropped by about 20% in April upon the tariff news, and now it's back to like -4. So in the meantime, they bought back shares, 850 million worth of shares, which is pretty cool, right? So the company is pretty much doing like business as usual on their side, either if it's BN, BAM, Brookfield Renewable, or infrastructure. So the point at this time is which type of business you would like to have in your portfolio. If you're looking a little bit more for income, of course, you will go for the infrastructure and renewable. If you want to have exposure in the financial sector, that's going to be a little bit more BAM or BN. All of those businesses are interlinked. So make sure that when you add up all your positions, if you have like more than one Brookfield, just make sure that your total doesn't like make you uncomfortable, because the management risk around all of those is the same. So if there's a problem with one, chances are there are going to be all contaminated, and that could be bad news for you, right? So just want to highlight this. Full disclaimer, I do have shares of Brookfield Renewable, small portion of Brookfield Infrastructure, and I do have also a full position in Brookfield Corporation. So as you can see, I don't mind that risk, but that's just me. That's not you. You have to do your due diligence and feel comfortable with this one. So right, Moose, that's enough for today. Tomorrow, we're going to come back with another show. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy this show and do your due diligence after it.